Today, we are diving into the battle of the titans, Vanguard Index Funds versus Fidelity Index Funds. If you're new to investing and looking to make the best choice for your hard-earned money, you've probably come across these two giants. They're both well known for offering low-cost, reliable index funds. But the question is, which one is better for beginners in 2025? Let's start with a bit of background. Vanguard is legendary in the world of investing. It was founded by John Bogle in 1975, who created the very first index fund for individual investors. The firm is known for its low-cost passive investing approach that helps investors track the market rather than try to beat it. On the other hand, Fidelity has been around since 1946 and is famous for its active management options, but recently made waves by launching zero-fee index funds, challenging Vanguard's long-standing dominance. For beginners, one of the first things you will want to consider is account minimums. Vanguard usually requires a $3,000 minimum to get started with most of their index funds. Fidelity, however, requires no minimum at all for their index funds, including their new zero funds. That's a clear point in Fidelity's favor. Next, we move on to fees, one of the most important factors for new investors. Vanguard has always been known for its ultra-low expense ratios. For example, their total stock market index fund has an expense ratio as low as 0.04%, meaning you pay just $4 in fees for every $10,000 you invest. But Fidelity has shaken things up with zero-fee funds like the Fidelity Zero Total Market Index Fund. Fidelity is offering index funds with no management fees at all. For beginner investors, saving on fees can make a big difference in the long term. Now let's talk about diversification. Vanguard's flagship fund, the Total Stock Market Index Fund, or VTSAX, holds over 3,500 companies, giving you exposure to a wide variety of industries and sectors. Fidelity's comparable fund, the Zero Total Market Index Fund, or FZROX, holds about 2,500 companies. While both offer broad market exposure, Vanguard Fund is slightly more diversified. However, for most beginner investors, this difference is minimal and won't drastically impact your returns. Tax efficiency is another critical point to consider, especially if you are investing outside of a tax-advantaged account like an IRA. Vanguard has a strong reputation for tax efficiency. Their index funds are designed to minimize capital gains distribution, which means you can keep more of your money working for you. For instance, Vanguard's Total Stock Market Index Fund has distributed zero capital gains since 2000. Fidelity's newer zero funds haven't been around long enough to build a track record. But historically, Vanguard has held a slight edge in this area. When it comes to trading costs, both companies offer commission-free trading on their own index funds. However, if you plan to trade individual stocks or funds outside their proprietary options, Fidelity charges $4.95 per trade, while Vanguard charges $7. For beginners sticking to index funds, though this won't likely be a major concern. Customer service and technology are also worth considering. Fidelity is known for its excellent customer service with 24/7 phone support and physical branches across the US. Their online platform and mobile app are also user-friendly and packed with research tools that help new investors. Vanguard, while reliable, doesn't have an extensive customer service hours, and their tech platform isn't as modern or streamlined as Fidelity. Fidelity may have the edge. Let's talk performance. While both companies offer index funds that closely track their benchmarks, Fidelity's zero-fee funds could give you a slight advantage, particularly in the early years. However, the long-term performance of Vanguard funds, combined with their strong tax efficiency and broad diversification, has made them a favorite to buy and hold investors. So what's the final takeaway for beginners? If you're looking to start with a small investment or value top-notch customer service and modern technology, Fidelity with its zero-fee fund is a fantastic choice. But if you're planning to invest for a long haul and value tax efficiency, diversification, and a time-tested approach, Vanguard remains one of the best options on the market. At the end of the day, both Vanguard and Fidelity are leaders for a reason, and either will serve you well as you begin your investment journey. Choosing between them ultimately comes down to your priorities. Whether that's minimizing fees, having access to great customer service, or focusing on long-term growth. Regardless of which you choose, starting your investment journey with index funds from either provider is a smart, low-cost way to grow your wealth.